Good morning, traders and investors. Welcome to TA Live. This is the Wednesday live stream. It is October 28th, and I hope you guys are doing well. Welcome, welcome. Let's see. Got a good show for you here today. A lot going on here in the pre-market, a lot going on in the world. Futures are getting cooked here this morning, coming up in less than a week to the election. It's unbelievable that it's here. We're in the midst of earnings season. A lot of vol in the market, a lot of directionless price action here. Very difficult trading environment. Kind of feels like everyone's trying to jockey for position here, trying to figure out the play into the end of the year, and then I think more sort of positioning for the new year. So there's a lot to think about here from a trading environment. Extremely difficult, if not untradeable. And I think there's times where you just have to just come right out and say, look, this is not the time to try to be moving in here. We have some action on the downside. We have some setups on the downside. The team, from an Elliott point of view, will show you guys that there is possibility that we'll have extended sell-offs here to the end of the year. And we need to position, and we need to sort of adjust our portfolio as such. Couple announcements before we start. I do have CNBC today. Should be about 2:30 Wednesday on Power Lunch, and then we're doing the Trading Nation before that. Some other fun things have been working in the background here. A lot of you guys have asked about the new money management firm, the new RIA that I'm forming. It's legally filed. Founding documents are being set up. I don't know if I'm ready to announce the name yet. I've said a lot of names, so pretty cool there. I'll tell you the whole story there, and that's that. So housekeeping out of the way. As I said, there's a lot happening on the geopolitical front. On the political front, COVID seems to be spiking, and there's a lot of talk back and forth that's saying that testing is increasing, so the positive infection rates are also increasing. Whatever the truth there is, I don't think any of us know any better than anybody else. So that's hitting the markets as well. And I think there's a lot to say about earnings here. Earnings have been solid. We just had Microsoft, who just had AMD, and not responding well here. So Microsoft trading down about 207 after a good report. AMD reported early after that. I think they kind of preempt that Xilinx announcement. They bought Xilinx for $35 billion. So I think they just kind of smoothed out the volatility they pre-released there. And throw everything on top of this, guys. We have the Google antitrust. There was an interesting article yesterday that in the journal, and I thought it kind of struck me. I wanted to just throw it by you guys. It's interesting for a president who's behind in the polls to throw an antitrust out there. I think they kind of referred to it as a poison pill in this editorial yesterday. If Biden wins, and all the indications point to a Biden victory in the polls, of course, we all have sort of nightmares about the 2016 polls. I think sort of that view on the street that Biden's going to win and his tax policies are going to become a reality has kind of been pared back a little bit. I think they're starting to realize it probably is going to be a closer election than what's being reported. But if Biden were to win, that Google antitrust right out on the top he's kind of in a bad position either way. If he deals with it, he'll have to win. If he deals with it, if he wins, he'll have to deal with it. If he drops the suit, he'll likely face criticism from, the anti-big business left. So he'll lose a little credibility there. If he pursues the case, he'll likely lose because Microsoft has set a strong precedent. It's hard for the way the current laws are with antitrust to pursue a digital company like this. Will likely lose. So I think that this is not a political statement at all. I think at the end of the day, if Trump wins, I think that's ultimately going to be positive from a tax cut point of view. If Biden wins, I don't think he's going to move forward in anything on the technology front. And if he does, he's going to lose. I think it'll be positive for technology. So longer term, we're continuing to be bullish. Facebook Also, some interesting news coming out. They're moving into VR gaming, and I just want to mention this. They're mentioning it moving into gaming, and they're joining Google. They're joining Netflix, even NVIDIA. And I got to tell you guys, my old company sent us these for a gift. This is the old school Oculus Go. I've been playing with it with my kids. It's so addictive. It's unbelievable. Like the technology that we have with this. This is an old school model. It's crazy. Facebook bought Oculus in 2014, moving into the VR. It's taken a while for virtual reality to even get up to any kind of speed. I don't think that's necessarily a bad thing. And I think in this work from home environment, this virtual reality, specifically in the workplace, I think is going to be a big boost for Facebook. I'm really bullish on this. The games are unbelievable. I'm not a gamer. I don't sit here. I've been trying to play this one game, this cowboy game, for 2 years, Red Dead Redemption Part 2. I've been trying to play it. I'm like 10% of the way through. I'm too busy. But I do think, Facebook is onto something here. Facebook has been responding pretty well in this tape. They moved into the gaming, which I think virtual is going to be interesting. So watch that. We'll talk about some portfolio stuff. I'm going to handle my portfolio later in the show. Let's bring the team in here and sort of get caught up, figure out what's going on as the futures are falling away here. NASDAQ is down 1.6, S&P down 1.9. It's kind of, futures gotten worse all morning. And interesting, we'll have Alex in to give us the macro feed on gold, which is down, and silver, which is down right around 2%. So team, good morning, guys. How are you?
Good morning, Todd.
Hey, Todd. Good morning.
Busy show, huh, boys? You ready for this?
Well, I'm excited. I'm ready. I was born ready.
Bennett's doing a hell of a job behind. He's producing this show. He's doing a great job. You're putting me to shame, man. I used to try to do this behind this computer. I'm fired. You're hired.
Hey, without the stream deck, I'd certainly be in some trouble. So
Bennett has a 32 button stream deck. He pushes buttons like Willy Wonka and just makes magical things happen. So, all right. So let's dive in here, boys. Where's my? I'm already gonna get fired. Where's my show calendar here? Who's up next, Bennett?
I'm going to roll in with the indexes, bring them up to speed on this gap lower that we're looking up against here.
For some reason I lost my. I'm really going to get fired. I lost my show schedule. Bennett, show us what's going on with the indexes here, brother.
No worries. It happens. Let's jump into it. Good morning, viewers. Thank you guys all so much for tuning in. My goodness, it's been quite an interesting start to the week. As Todd mentioned, we had both AMD coming out, AMD and Microsoft coming out with the top and bottom line beat. Market's not responding too favorably at this point, which is really not a huge surprise if you take into consideration the fact that we've got a lack of stimulus, we've got coronavirus numbers on the rise, we've got the elections ahead of us. It makes sense that we're kind of consolidating now sideways to even lower, which has been one of our potential Elliott wave counts. So let's jump into it. We're going to go into the Motive Wave platform and take a look at our current wave count, which is taking into consideration the move lower that you're seeing reflected here in the futures market this morning. So we have two specific wave counts. We typically like to present our preferred interpretation, and I've been tracking a wave count here which would indicate perhaps we are simply consolidating for a move up through the previous September 2nd highs, becoming less and less likely. But one thing that's really interesting here is we saw consumer discretionary push to a new high, and we actually had the leading stocks and sectors indicating kind of a directional move. So if you look at the NASDAQ 100, if you look at the tech sector, heck, even look at semiconductors, which also broke through, along with discretionary, the September 2nd high, those charts were indicating or attempting to establish a directional move. And that's continues to kind of fail here as we consolidate. We were probing lower, trying to hold support, and that support just is not wanting to maintain at this point with all the uncertainties ahead of us. So the wave count, which we put in front of you guys a couple weeks back, was this here, which we are counting off of the March low, is a completed motive impulsive 5-wave advance. So essentially what you have here is a 5-wave move into the September 2nd highs. You got a lot of constructive fib going on within this particular move. We've talked in the past about the psychology associated with the kind of lack of clearly isolated corrective structures within this particular move. That's likely a product of the fact that we were coming off of such a significant move to the downside. So off the daily chart, I'm going to drop down into the 1 hour chart, and I'm going to show you guys what I'm seeing currently in regards to this downside move, which is well underway here this morning. So if I take you over to the September 2nd high, we can count the move into the September 24th low, which is where the S&P had its low. Tech actually bottomed with the NASDAQ on the 21st. So we can count this as a leading contracting variety diagonal. You have a wave 3 shorter than wave 1. You've got a wave 4 that's a smaller net percent correction than wave 2. And you also have a wave 5 that's shorter than wave 3. Those are all requirements when you have a contracting diagonal, regardless of if it's leading or ending. And from there, the move from September 24th through October 12th in the tech sector and in NASDAQ and in many leading stocks really resembled that of a 5-wave move. Here in the S&P, it's not quite as clearly directional. It really looks a little bit more corrective in nature. And the way we would count this is a 5-wave move up here in a little bit of an unusual ABC sideways corrective structure, which had a couple of catalysts associated with this in regards to President Trump instructing House Republicans to stop negotiations in regards to stimulus. Then we had President Trump and First Lady Melania contracting COVID. That was that secondary little move here, which ended up just being a measured move of the initial A wave. So that supports the idea that that's part of an overall 3-wave structure, albeit a little bit unusual and not quite meeting the guideline of the right look. And then from there, if you were to take a fib projection, so a Fibonacci measurement of this A wave and project it from your B wave, it's pretty much where that C wave October 12th high ran into resistance. From there, we have a nice 5-wave again. Look at this, another leading contracting variety diagonal, almost a smaller fractal of this larger pattern here. We then have a 3-wave retracement in wave 2. That simply took you to resistance inside the area of the previous 4th of that particular leading diagonal. And now we don't typically go down to a 15-minute chart, but I want you to see this down on the 15-minute time frame. And my goodness, I'm back to a full-size keyboard at the Stream Desk. I use a 60% over there, so I'm used to the keyboard shortcuts. But we've got a gap lower. So we had a gap lower on October 26th. And look at this, a 5-wave move into the 26th low. And I think we can all agree that price action from the 26th low into the 27th, yesterday's high, was likely counter trend and corrective, which indicates we should at the very least see another move that is equal to this wave here, which would take you down to that 34.10 level. So I'm watching this structure very closely. One thing that's really interesting here is if in fact this is the wave count, and it's been a challenging count off the March lows. If this is the wave count, this would indicate we're going to move lower in C to take you down in wave 2 support, which could take you to a variety of retracements. But once that comes to completion and we get through the elections, I do still think that we've got a very strong possibility that we're going to gear up for a 3rd wave inside of the higher degree wave 5. If we were to take this wave 5 off the credit crisis lows and try to label it and drop it there and just say the 5-wave move is over and we're going to retrace 50% of this, I think you're doing yourself a little bit of an injustice there. And it would also not quite meet the guideline of the right look. So keeping our eyes very closely on price action today. Again, downside targets include 3230, which looks like we're going to gap through 3300. The 1618 is down at 3250, and then equality of this A wave as compared to C is 3175. But just because we have support down there doesn't mean that's where that C wave is going to end. We could very likely see another very common C versus A projection of the 1.618 versus A, which would take you into a more common wave 2 retracement zone. In fact, if we were to see wave C be equal to 161.8% of the magnitude of wave A, basically take you to the area of the previous 4th. So keeping our eyes on this. It's been a very interesting move. And again, really quick before I hand it off back to Todd, just to point out the directionality or the attempt at directionality here in the NASDAQ. You can see that down on the 195 half-day chart, you've got a beautiful 5-wave move. You've got a 3rd wave here that's a 1618 compared to 1. You've got a wave 4 that's a 38% retracement. You also have your wave 5 completing at what's referred to as the 243 Elliott wave trend channel. Simply put, take the completions of wave 2. Draw a trend line through the bottom of wave 4. Project your parallel trend line over the top of wave 3. That often gives you your wave 5 upside resistance when used in combination with your Fibonacci projection. So that's all from me this morning, viewers. Hope you guys enjoyed the section and keep our eyes on the markets. Back over to you, Todd.
Did you guys hear how he said that's all? Like, it's an amazing piece of analysis there. You know, so just keep in mind when Bennett's moving through those time frames, he was just showing you the CF2 low down around 3150 area. Just keep in mind that that's a 15-minute chart. And then I'll show you, I have one section where I talk about how I'm going to handle my portfolio at the end of the year. He showed you the long-term chart back to 2018, which we've been trying to drive the point. It's in the context of we've been sideways. We've been in a sideways correction with higher highs, lower lows. It's been an expanding volatility, mean reverting in terms of volatility, mean reverting correction. We do see resolution, but over the last 2 years, it's been sideways. That's why you have to be in the right stocks and sectors. So anyways, let's go to a commercial break. We'll real quick, should be 1 minute back on the other side. And we will have Terry, the sector rotation man, ready to make sense of it all for you. Be back, guys.
Now, if this sounds at all interesting to you and you guys are curious to learn a little bit more about this whole Elliott wave thing, I would encourage you to sign up for our upcoming webinar event. This is actually going to be hosted Wednesday, October 28th, 7 p.m. Eastern Standard Time. Todd Gordon and myself, we're going to take you through an introduction to the Elliott wave principle. We're going to talk about a historical analysis of the S&P 500 as well as the leading NASDAQ 100. We're going to talk a little bit about Todd Gordon's investment portfolio and how he's hedging against any potential volatility heading into the election season. And then if you are interested in learning Elliott wave, we've got a course that we put together specifically designed to teach you Elliott wave from the ground up. We've got a fantastic promotional offer available tomorrow night, Wednesday, October 28th, 7 p.m. Eastern Standard Time during the webinar. So we hope to see you guys there. Again, you can go to tradinganalysis.com/webinar to get signed up. Thanks again, and we'll see you guys on the next one. Take care.
Hello traders, I'm Terry Long with Trading Analysis, and this is your weekly sector analysis. Let's take a look at the weekly performance of the index and the sectors. Following last Monday's sharp decline, the S&P traded in a very narrow range. You can see here in this red box, this is last week. There's Monday, and then we had this very narrow performance all throughout the week. Technology stocks also weakened ahead of earnings. The NASDAQ did a similar play here. The NASDAQ 100 finished the week just below the 61.8% retracement level here. Now, looking into this week here, we also started off Monday with another big dark candle here. Tuesday's action is down, and the futures are down this morning. We'll talk about those in a minute here. Let's check the performance charts, and again, talking about last week. The Twitter, Facebook, and Google each made over 7% gains last week, which pushed the XLC sector higher, advancing more than 2% for the week. Now, defensive sectors, utilities, financials, utilities, financials, and energy, they made modest gains. The technology, real estate, and the staples were the week's worst performing sectors. Let me get this out of the way. Now, this is what's been happening so far, Monday and Tuesday's price action. So looking at this week, we've also started the week with a dark candle. All 11 of the sectors are trending lower on this Monday and Tuesday action, with utilities actually just holding very steady here with very slight loss so far. But yes, it's an ugly week, and it looks like it's going to continue uglier as we see what the futures are doing. Let's switch over here to our sector rotation here. Our leading sector in terms of relative strength ratio, it remains the consumer discretionary. It continues to retain a slight edge here over technology, but note the very short tails that we have in these guys here. XLB, XLY, XLK, XLC. The tails are not very long. We are starting to see a little bit of an increase in growth here in in discretionary, pushing it down, deepening, I guess, increasing or decreasing momentum in technology. But overall, these guys are reacting fairly stable. We'll see how the rest of the week plays out. Industrials is now, after this move down, I believe materials is right on the edge here of moving into the weakening quadrant. After this moves down, the industrials is going to be the only sector holding out in the leading quadrant. Okay. However, it does remain third place when we look at in terms of our relative strength. Now, the communication sector, on the heels of those gains that I mentioned last week in Twitter, Facebook, and Google, it does appear that a hook is beginning to form. You can kind of see that beginnings right there of that hook. I'll give you a little bit of rotation there. And that's a positive sign. So the continuation of this could indicate that the XLC is prepared to resume a push back into the leading quadrant, but it's still got a little edge here. We want to see some more northerly movement here. Now, the remaining underperforming sectors, they do continue to show some modest momentum gains, especially here in utilities, okay, and in staples. Healthcare is lagging. Healthcare is on the edge of moving into the improving, but it's still lagging. I don't see at this point that any of these guys are ready to resume a leadership position at this time, but they are working that direction. On the daily, let's take a look here. This is value and growth, okay? So I've got a daily chart. I got a weekly chart. Look at the daily chart over here. Each one of the line segments represents 1 day of movement, and there's your animation. Here's what happened in the last 5 days for the growth here. Growth stocks are showing declining momentum, while value stocks are showing gaining momentum, and also a little bit of rotation here in terms of relative strength. Starting to see the growth stocks weaken here in the daily as the value stocks strengthen. But when you look at the weekly, you've still got a significant gap between these two. So growth stocks are still outperforming value overall, even though the growth is down here in this weakening quadrant. Its relative strength is very strong. All right, let's move on. Let me get my notes adjusted here. So we're going to do sector focus, and I'm not going to go through everything here, but I want to focus on consumer staples. So this is a chart of the top 20 by market cap. Of all the underperforming sectors, the consumer staples has seen with both rising momentum and relative strength gains. Even though it does remain in the improving quadrant, there are a few notable stocks in this sector that are continuing to outperform the S&P. Now, this sector's current leaders are Archer Daniels Midland Company, ADM, Estee Lauder, Cisco, and Procter & Gamble. Okay, so you can see the relative strength ratios, momentum ratios here. And these guys are all turned green, and they are continuing to advance further up into this leading quadrant. So the bulk of the XLP still remains over here in an underperforming position, but we're starting to see a few opportunities moving here to the right. I'm also seeing Walmart appearing to follow Costco up here out of this improving quadrant. Walmart last week was down in this improving quadrant. And now it's moving up, and it's also on the heels of Costco, also ready to become a new sector leader here. Now, this chart only shows you 20. I'm going to go ahead and pop this guy in. This is all 32 of these stocks. Not much different picture, but I just wanted to show you that, just a few more conglomerates. Okay, I'm missing a few. Are they in the leadership position? Not yet. Most of the ones I'm missing, I think we're down here in this lagging group here. Now, there is momentum building in many of these lagging stocks, though, in this sector. You can start to see this rise. Most of these arrows are rising, right? And the last time this happened, I think, was back in January. Let me just take this is a weekly rotation. Let me just take you all the way back around. And we're going to pull this all the way back to January. Okay. So you see anything similar? I see a big cluster of stuff here in the lagging sector. I don't see the same stocks that are in the lead today. I don't see those same ones coming into the lead here in January, right? But just watch as we rotate through, and then we hit our COVID wall, and then we had our big drop off right around here, starting around February 14th all the way down to March 29th, and then you can see how we start to get advancing momentum and relative strength, and then all of a sudden there was this big huge race to the lead, and we had voila, nearly more than half of the group take the lead. Over the summer, things started calming back down. Staples took a back door again, and now we're just seeing the gains here in through September, October, and so momentum is building. That's the whole story here, right? So I still think it's too soon to confirm a full rotation of the sector back into the leading quadrant, but I am keeping a watch on it. All right, I'm going to leave it there, guys. Back to you, Todd.
Very, very nice work, Terry. Yeah, that's interesting. We're seeing staples, as he mentioned, Archer Daniel Midland. Also seeing utilities. Utilities were really getting a pretty good rotation. If you look at some of the yields on these guys, we'll talk about it as I get into the portfolio section, but just ripping off a couple of the yields in the utilities, 4.1, 4.5, 4.2, 3.7. There is a rotation into yields here. There's definitely a macro trend happening right now. Gold down 1.6, silver down 4.2. Holy bananas. A little bit of deflationary trend there as bonds are catching a bid, bonds are under support, yields are dropping. And again, that's supporting what Terry just talked about, rotation into staples and utilities. A little bit of a backseat in technology here based on an uncertain tax future. We'll talk about that, which is a nice segue into Alex to kind of get us straight on the macro flow, which seems to be moving this morning. Alex, what's going on?
Hey, good morning, guys. Good morning to traders. So let's look a little bit of a macro scene, and I think the macro scene is confirming what we are seeing on other markets. So let's start with oil, and after touching this 78.6 retracement level, which we actually in many cases look as the last resort corrective move levels. We are heading down in oil, and for now, this move down is moving relatively impulsively. So I think in this environment, when you look all of the Europe and closing down the economies, I think the environment is pretty much confirming this wave count that we are going to see a lower prices in oil ahead. Definitely gold is going down today. Silver is going down, which we are going to touch on just in a few seconds. But yeah, oil is still looking for a move lower down to 34.30 according to this wave count, and I think the environment is there. So let's look a little bit of dollar. So on dollar, we have been kind of looking for a possibility the dollar is going to move higher from our support level, and now actually we are seeing a move up in dollars. So on a daily chart, we are looking for a move up. This can turn out to be in triangle, but for now, I think looking the other markets, I think we are going to see this ABC move in Y wave up, and environment is also there. A little bit of bid for a safe haven. I think the dollar still kind of plays a small role as a safe haven refuge. And I think we're going to see this move up. ECB is on Thursday. I don't think Lagarde will be very nicely towards the current exchange euro-dollar rate. Actually, in the last ECB minutes, euro-dollar rate was mentioning 53 times. Can you imagine that in Draghi's time? So no way. So definitely the levels of the euro-dollar is not very welcome in the EU and current economic situation with the closures. I think potentially Lagarde will fire up on the stimulus, adding some programs and touching base on a political level to kind of enhance a fiscal stimulus more in European Union. So I think in these turbulent times, dollar is going higher. So let's look gold. gold is moving lower, and we are seeing now what we have been discussing for the last few weeks. This move up was very, very weak, and we also was looking for a break of this support at 1,863. For now, I'm going to still extend a little bit lower this wave 4 until I see the test of this wave count invalidation level. And I'm going to stay relatively bearish for the time being, touching this 1,775 levels for now, because this move didn't prove to be an impulsive one for now. But this support is challenged, and I think it's going to be challenged and broken today. So I think gold, at least a short term, 1 week, 2 weeks, 3 weeks ahead, we are going to see a lower levels. So from silver is also moving lower, and I think silver will be great entry. And when this correction is done, we are going to challenge soon support 2247, 3 waves up, which I label as an X wave. So 3 waves down in a W, X, Y, which will make a double zigzag. And I see support around 17, 18 levels. And our chart, which we will pointing out many, many times in our Wednesday webinars or live shows, is that gold-silver ratio is moving up, which means that silver is going to fall at a higher rate than gold. But actually, since we see a 5-wave move down, I think after this correction is finished, actually silver will outperform gold. So that's from the macro levels. Of course, we have elections in the United States. We have a COVID spreading all around. So macro risks are really heightened all around the globe. So let's see a little bit in currencies. So euro dollar is actually respecting our X wave highs. As you can see here, we pointed out last time that the X wave and this resistance levels are close to 119 might hold, and we are seeing now a break of this corrective channel. I think ECB Thursday will be negative for euro, and I want this 117 key level broke, and then I will look 114, 113 in the next few weeks on euro dollar on a higher time frame. I'm going to stay euro bullish for now until I see this levels challenged, but I think this is a complex WXY. All of the subdivision from a potential highs around 120 was unfolding in 3 waves. There is a slight possibility we can turn up and do a triangle here, but looking at the environment and ECB ahead, I don't think that will be the case. Also, when I look the board, Aussie is moving down, New Zealand is moving down from our key resistance levels. So I think this dollar move higher and the risk off will be reflecting on a commodity currencies, on yen, and dollar CAD is moving up, of course, as we were looking with our members because the oil is moving down. So let's just take a peek in pound. We were looking for a pound lower last time, and pound is now confirming. I need a little bit of break of these levels here, and I think pound is going to continue move lower. So let's just look a little bit of cryptos. And we talked about the move up in Bitcoin. 127 zone was held. So risk off. Bitcoin is moving a little bit lower, nothing much, but the RSI reading on this daily chart are in the 90 levels. So I think potentially I want to see an impulse wave down to confirm a flat back to support level around 10,000, where we are going to look for a potential impulsive move up and a moving higher from Bitcoin. And I can show you also Ethereum Bitcoin cross, which we track with our members. So this is an interesting setup, the Elliott wave setup. Very nice levels, very small risk for a potential longs. If the Bitcoin starts to move lower, potentially Ethereum might outperform. So on a Bitcoin dominance chart, and this cross we see as a 1-2 up in 3, a lesser degree, so 1, 2, 3, green by 4, and we expect these levels to hold. Wave counting validation is very close, so I count this as an A triangle B, down in C, and I expect an impulse move up in 5 waves. Correction is definitely a buy with the small stops below and moving higher in this higher degree. Wave 3 reaching 161.8 levels of the Fib 3 through 1, which is a common ratio for the highs of the blue wave 3. So that's a small, fast recap, guys, for you. Visit us and visit Trading Analysis for crypto and Forex services. We do a relatively nice job. And back to you, Todd.
Guys, I'm like getting choked up over here. I'm like speechless. We have a real show. We're on schedule. Bennett's pulling the levers. Alex finishes on time. He's got so much. Like we have a real show here, guys. Throw a thumbs up in that YouTube window if you don't mind. Let that evil Google algorithm know. Put that little thumbs up. Throw a question, comment. Let Google know that you're watching. You appreciate what's going on here. So look, FX, don't overlook the importance of FX. It's been sleepy for years because the thing that makes FX move is interest rate differentials between all the central banks. Well, in response to global credit crisis, they dropped them all to zero. FX hasn't moved. It's about time that FX starts to do something. It could go quiet for a long time, but I'm kind of feeling like we could get a move. And when we're starting to see this deflationary force with gold down 1, silver down 4, crude down 5%, bonds moving up, yields down, sort of getting a little deflationary push, that all means dollar up. And there's a long-standing relationship of being U.S. is such an international, multinational-based stock market with so much exposure overseas. Stronger dollar generally has an inverse correlation to the U.S. market. So if this dollar continues to get strong, watch Alex to take cues. That is not a good thing for equities. So what is a good thing is a commercial break, 1 minute, back right on the other side, and we'll do portfolio management and show you what we're going to do to the end of the year. Back on the other side. Hi, if you don't know me, I'm Todd Gordon. I worked in the trading markets as a profession and a passion immediately following college 19 years ago. As I've grown older, my trading and investment style has changed. As I've grown as a trader, my holding period for my investments was also growing longer. I was learning firsthand that being properly allocated in the right stocks and sectors on a longer term time frame with proper hedges in place and the idea of compounded returns are the keys to building real long-term wealth for most of the investing community. You can short-term and swing trade the stock and options market if you like, but do so with a very small percent of your capital. And by no means should you be trading with a majority of your investable assets or your portfolio. For our clients at Trading Analysis, we recommend that you don't trade with any more than 20% of your portfolio in the strategies for our members at TradingAnalysis.com. The rest should be managed by a professional financial planner. So last year I ventured out to make a final evolution of my career in the markets. I left the very capable team at Trading Analysis that I built to run the day-to-day operations. I set out to build a wealth management business leveraging our reputation from CNBC and our years in the financial markets. We'll be launching soon, so please keep an eye out for details. If you'd like to be updated as information becomes available, please visit www.tradinganalysis.com/investments. Again, thanks very much for your interest. Look forward to what the future holds. Cheers, and let's get back to the live stream. Okay, so welcome back, guys. We've got 4 minutes until the open. Future's still under pressure here, and there's a lot of kind of talk about what to do towards how to handle the portfolio at the end of the year, and usually we get something called tax loss selling, which is the ability for investors to sell their losers to realize that tax gain, of course, in the non-qualified cash accounts to offset gains and taxes due in winning trades. Well, this is a presidential year, and with the polls so heavily up until a couple days ago favoring Biden, possibly even being a blue sweep, we're starting to see some pressure in the higher beta growth sectors. So people are actually starting to take profits in some of these tech stocks that have done so incredibly well in anticipation of potentially higher taxes going forward. So, I think, look, if Trump wins, I think they rotate right back in. Obviously, tax cuts are not, or tax increases are not an issue. Would Trump continue that antitrust approach, that case against Google, and start to set the tone for the rest of big tech? Big cap tech, possibly. If Biden wins, I feel like the antitrust is going to be dropped, and tech is going to rally anyway. So I view this as very transitory, and especially if the polls continue to indicate for the next week and presses technology down, that there will be a snapback in either case in technology. We did see rotation. I just wanted to mention Terry started to talk about staples. Bennett, I'll go full screen here. With this, take a look at the utilities. These are ranked in the XLU by yields, and if you look at this, in a market where it's really hard to get any kind of yield in corporate or muni debt or U.S. Treasuries, you've got some utilities with 4, 3, 2.5%, 3%. And as if you kind of scroll through here a little bit, I'll make this chart as big as I can. You're going to see that charts are not that bad here in these utilities here. Let me just pull this to the side. So here's Duke, here's Dominion, here's Southern Company, Exelon. I mean, some pretty good charts there. And again, XLP also sporting a pretty good yield on some of these. Not as good of a chart, but you get some stocks like ADM also looking pretty good. So is the rotation for real? I don't think so. Terry's longer term growth versus value rotation just showed how they're on polar opposite ends of the spectrum. It's a long way before growth is going to fall back and catch down, I should say, to value. I mean, there's been all sorts of talk about value investors starting to kind of value funds start to close shop and say this gap is never going to be closed. I think we're just in this technological boom and we're seeing some short-term volatility. I will be hedging at the next 2 months with clients that are on board with me. I'll be hedging my portfolio. I'm definitely going to take a little shot in the teeth here in the open with the market down as much as they are. I still have a lot of tech exposure. Looks like I'm down about $8,000 to start the day, which is fine. So we will be hedging, but again, longer term, I think it's positive. And one other thing I wanted to show you guys, I'm watching what the team's doing on the Elliott Wave front, and it's super interesting. And I generally have a rule. I don't like to buy pullbacks off of highs that didn't make a higher high. So we have a high here in September. We have a lower high here in October. We are in the midst of a pullback, and Bennett and team on the Elliott Wave side, we're trying to find support for you in the index. But actually, if we think about something interesting, and this is a closing thought for you guys, and I'll bring the team back in here as the bell just rang. Have we had a time where the market did pull back following a lower high, ultimately held support, and then pushed higher? And the answer is yes, almost 1 year ago today. So if you look back here, in August of 19, we went down here in August, rallied up in September to a lower high, found support here at the very end of September, and then commenced the October rally. And it was about October 25th, the week of October 25th, when we broke to new highs, and then we went into COVID. If you look at it, it's almost the same thing. We're just a few weeks off here. We have a lower high. We have a pullback. October 25th, 52 weeks ago, was the week that broke to new highs. I think it's kind of the timeline is being pushed out because we have the election coming up. There is so much uncertainty from a fiscal point of view that, I ultimately, I think the same thing is going to happen. I mean, I could obviously do without the COVID sell-off with another wave of COVID, but history doesn't repeat, history rhymes. And that's kind of what's happening here. So let's bring back in the team. Closing thoughts again, if you don't mind, put a thumbs up on the YouTube video. Let the evil Google algorithm know that you appreciate the fine work that the trading analysis team is doing. We do have a webinar here this evening at 8 o'clock. Bennett, can you give the team details on that, please?
Yeah, absolutely. We're going to be talking about the Elliott Wave theory. We just had the 33-year anniversary of the Black Monday 1987 crash. Took place on October 19th of 1987. We're going to take a look at how Elliott Wave played a role in predicting that particular corrective pullback. And then we're going to give you guys a breakdown of what Elliott Wave is. Perhaps you're new to the whole idea of the Elliott Wave principle. We're going to go through an introduction to that. We're going to go through historical market analysis. We're going to talk a little bit about hedging into the elections, and then we're going to wrap it up with a educational offer that we've got. We've got a fantastic course we put together designed to teach you, Elliott, from the ground up. So hope to see you guys there. TradingAnalysis.com/webinar if you want to get signed up for that.
That's a wrap. Guys, thanks for spending your time with us. Appreciate we're trying to get you out of here on the market bell, but all in all, great job. Thanks for joining us. Throw your questions, comments below. See you tonight at the webinar, 8 o'clock. Bennett, do we have a link up below the show here to opt in? If
yeah,
not,
I will
we'll get one up.
Yep, absolutely. I'll drop that in the chat.
Okay, perfect. And we'll have it below in the show comments below to opt in. So guys, we'll see you next week, Wednesday, 8:45, and we'll see you tonight for the webinar. Good luck. It's getting hairy out there, but it's getting fun. See you guys in the next show. Take care.